Be Wealthy and Smart, episode 1373.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about will there be rate cuts by September? Because numbers are heading more and more in that direction, giving us an indication that that may be the case. But first, the S&P 500 and NASDAQ reached all-time highs again. In 4 out of the last 5 weeks, we've had positive returns, with the S&P now up 16.7% year-to-date and NASDAQ up 22.3% year-to-date. Those are really better than one-year returns in only 6 months. Economic news coming out on Friday showed us that there was a slight increase in unemployment. It rose to 4.1% and was only expected to remain at 4%. So 0.1% higher in unemployment doesn't sound like all that much, but it's trending in the right direction, showing us that between consumer confidence weakening and unemployment rising, everything is headed in the direction that will help a rate cut come sooner. In the stock market, we saw a lot of short covering, not only on silver and gold, but also in shares of Tesla, which cost short sellers nearly $3.5 billion worth of losses last week after Tesla's stock surged 17% in 2 days, following a positive report on Tesla car deliveries and sales. Tesla's stock surged 24% in a week. We also have oil at a 2-month high at $84 a barrel. Due to geopolitical tensions in the Middle East. And we have artificial intelligence still leading the markets. However, NVIDIA CEO Jensen Huang sold $60 million of his NVIDIA shares. Sales of shares don't often indicate anything. People can sell their shares for lots of reasons. It's more when CEOs buy that we take notice, because they generally only buy because they think the stock will go up, whereas they may sell for many different reasons. Overall, the market is telling us the odds of a September rate cut is now 77%, which is up from 64% a week ago. Some key inflation readings in the week ahead could bolster the case for a September interest rate cut, as investors deliberate how long stocks can sustain their rally to record highs. Again, what the Fed does is based on what the data says. According to Seema Shah, Chief Global Strategist at Principal Asset Management, she said, on the one hand, the downward revisions to prior months and the rise in the unemployment rate raises the odds of a September Fed rate cut. Bond markets are certainly celebrating this. But those same figures cannot help but prompt a twinge of concern about the direction of the U.S. economy. The broad host of economic data all pointing to a softening. Today's report adds to that picture. Yeah, so it's all about the data, and everything looks like it's softening, with unemployment rising and the consumer price index dropping, as well as consumer sentiment looking weaker, where consumers just don't feel as confident with the economy about spending for big-ticket items in the future. So we'll continue to monitor this and report back to you, but what the markets are saying now is while the chances of a September rate cut are at 77%, that gives us the opportunity to possibly even have a July surprise at the end of this month. So we'll watch the Fed meeting in July and see what they have to say. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.